Okay, and I will open this up for questions as soon as we get finished today. I want to make sure I, I think I will probably answer all the questions that you are wanting to know throughout, but you're welcome to ask me questions on the back end. So I'm going to just get started and just tell you a little bit about me. My name is Courtney Epps. I have a company called Outside the Box Business Solutions that me and my husband started. I've been an accountant actually for 18 years. And in the last 18 years, we do a lot of things here. We actually do full service accounting firm. So we do bookkeeping, we do tax services, we do CFO work. So that's what I have been doing for the last 18 years. I have a mom of six. I'm an author and a speaker. And the best thing is, as far as my job that I would share with you, is that I'm a tax strategist. So it's my job to free up money to help people find money that they didn't know that they had. I reside in Greenville, South Carolina. That's where our accounting firm is, and we have clients all over the entire country and almost every single state. So I love talking and I love sharing with people, what we're doing and how to save money in taxes. And I graduated from Coastal Carolina University, and probably none of you even know where that is, but it's in Myrtle Beach, South Carolina. So we'll just get started, and I think I will teach you some things today because honestly, it took about 15 years of being an accountant before I realized the huge, massive advantage of having a home-based business. And so I did a tax return for someone in a network marketing company. They reached out to me, asked me to do a return for them. And when I did that return, I actually freed up $4,100 more than they'd ever gotten back on their taxes before. See, the thing was that they were a W-2 employee the year before, and then they started this home-based business. They were not super successful in the business, but the expenses from the business allowed them to save $4,100. They ended up using that to go on a vacation and use the benefits from the travel company that they were in, and then they hit the first rank in the company. So it was really a big aha moment for me that she wasn't spending a lot more money than what she was currently spending the year before. It was just that by having a home-based business, she now has access to massive tax deductions that I didn't even realize were available because I was taught, just like everyone else probably on this call, that a home-based business is not legitimate. And I've had accountants tell people that they should not have a home-based business, that it could trigger an audit. And those things are just myths. They're not true. And just because you have a home-based business does not mean it's going to trigger an audit. What it does mean is that you are entitled to tax benefits that W-2 employees are not by being a business owner. See, the thing is there are two tax systems in this country, and I'm going to share those with you today. And those two tax systems, one is for the self-employed or the business owner, and the other is that tax system is for the salaried employee. And it was created to take your wealth, whereas for the business owner category was created to actually help you create wealth. So business owners create employment, they create and build economy, and because of that, they get massive tax deductions. Well, someone has to pay the taxes, and that is pushed out to the employee to pay the taxes. So we utilize the money that we would be paying in taxes and employees and helping build the economy and growing and cost of goods sold and all this other stuff, and then the employees pay the taxes. That's how it works in this country. So, what I'm going to share with you today is what I realized is that the average family in America is overpaying $4,000 to $8,000 a year by not having a home-based business, and why you would be brain dead not owning a business. And the reason why is because you've got to get into that second tax system. If you're not there, you've got to find a way to get there. What I have found is the best way to do that if you are a W-2 employee on a part-time basis is to get involved in some sort of network marketing company. I tell people to find something that they're passionate about, something you can open your mouth and just share very easily with people, because that shows through. You don't have to be a great salesperson to share with people something you're passionate about, because they get it and they realize that you're not there just to make money. They realize you're trying to help them. So that comes a long way, as far even if you're the worst salesman on the earth. So what I do is I work alongside speakers, coaches, trainers, and network marketers, and I help them attract more people, either to come to their events. I help them attract more people into their downline. I help keep those people around long enough to win, and then I help them keep their hard-earned money when they actually start winning. So it's a win-win situation between what I do and what you guys are doing. So if you are on this call and you don't have a home-based business yet, find one. If you're in a home-based business, you have made the smartest decision that you could ever make just by starting your own business. So I believe, and I will be brutally honest with you, this industry is for everyone. Not everyone is going to make money right away. But the thing is that the sheer tax deductions alone are worth the benefit of being involved in the company. And I'll continue to share with you why. Why this is important and why I'm continuing to share this every single day is not to grow my accounting practice. Why this is important is that 46% of Americans don't have an extra $400 to their name. So that means if they miss one paycheck, they're in turmoil. 66% of Americans don't have an extra $1,000 to their name. And the thing is that all we have to do, the greatest expense of every single W-2 employee is taxes. So the average American spends more money on taxes than they do on food, housing, clothing, and transportation combined in their lifetime. So it's an extremely important purpose that we're talking about taxes today, because it eats up 40% of every dollar that a W-2 employee makes, and they don't even see it coming because it gets taken out of their paycheck. And then they're wondering, how in the world do I not have money to pay my bills this month? And that's why it's been taken up in taxes. So what I want to show you today is that here is an average household income of 60 grand a year, and that is the average in America. They're making 60 grand a year. So I showed a single and I showed married. This is what changed my entire accounting practice, is that I started focusing on sharing this information about a year and a half ago. And so the average household income makes 60 grand a year. And you see they have no business expenses because they're W-2 employees at this time. They're the standard deduction, which is single or married. So I've got those listed. Here's their taxable income. Here's the taxes. So you can see that a single person making 60 grand a year is going to pay about $14,000 in taxes. A married person is going to pay almost $11,000 in taxes. And then here's the so this is the take home, the difference between what they bring in and their taxes. The cost of living in America, sadly, is $53,000 a year on average. I lowered that just a little for cost of living for a single person, just to make you understand they pay a little bit less, but it's really not much. So what's left over? Almost $4,000 in the hole that the average person is going in debt by working 40 hours a week, 50 weeks a year to take 2 weeks paid vacation, and they can't figure out why on earth they can't pay off their student loan debt and their credit card debt, because our system is broken, guys. People have to understand that they have to have some sort of business. So what I do is I teach people what business expenses are. I don't teach you how to go out and spend more money to save money in taxes, although sometimes that makes sense, just like with me, and I'll talk about the Tesla in just a second. But, I teach people how to take their living expenses and redirect those into business expenses. So what is a tax deduction? The IRS says that any expenses incurred for the purpose of gaining or producing income, and is incurred with a reasonable expectation of resulting in future business, and is reasonable under the circumstances. So what does that mean in our terms? That means that if you're attempting to earn an income today or in the future, and it's reasonable, it's tax deductible. Now, it's reasonable to you. It is the IRS's problem in the first 3 years of you showing a loss on a business. It is their problem to determine whether or not your business expenses are not tax deductible. So they have to prove that it's not. That is not, the burden of proof is not on you. After 3 years, which is where people get this whole 3 out of 5 year rule, I can't claim a loss. That's not true. It's just the burden of proof comes back on the IRS to say, okay, you now need to prove to us that it is a tax deduction. And if you're making an income and you're growing a business, that is a lot of times the case. The first 3 out of 5 years, people are the first 3 years, people are typically taking a loss, and then they start coming out of the whole woodworks. But if you're buying property, if you're buying equipment, if you're buying vehicles every year, you could potentially show a loss every single year and have a perfectly logical explanation for it. So don't be concerned or scared or freaked out if you're showing a loss. It's okay. It's just we need to make sure that we're doing the proper documentation to tell the IRS that, hey, we really are in this to earn an income. So again, what I do is I redirect living expenses and help you turn them into business expenses. So what are living expenses and itemized deductions? So for a W-2 employee, you have itemized deductions. Some 96% of Americans do not get benefit for an itemized deductions at all because you have to go over the standard deduction. So the standard deduction this year is $12,000 for a single person, $24,000 if you're married. Head of household is $18,000. So if your medical bills, and most people don't realize there's the first 7.5% of your AGI, you do not get benefit from that at all whatsoever. So you can't write that off. Crystal, will you go get Tony and tell him to come in here and watch this? I apologize. I wanted somebody to watch this, one of my employees to watch this with me. Didn't even think about it. So the medical bills, you cannot pay. Let's just say we had $10,000 in medical bills and your AGI was $100,000 a year. What happens from that is 7.5%, which would be $7,500. You would not be able to take the first $7,500 in a tax deduction because of your AGI. So, you would only get a $2,500 deduction from that. Medical insurance, same thing. It goes into the same category. Property taxes, real estate taxes, and state taxes now have been capped at $10,000. So you can only take a benefit of $10,000 for that. And then we have mortgage interest and we have charitable contributions. So all of these are tax deductions, and you obviously can claim them as an itemized deduction, but there's massive caps. And unless you go over $24,000 anyway, you're not going to get the benefit. And you've thrown away virtually the first $24,000. So that's a W-2 employee experience with itemized deductions. Then we have living expenses, which are not tax deductible at all. So for a W-2 employee, so we have meals and we have auto expenses and cell phone and travel, home office, daycare, products, personal development. So all these things to me are necessary, and almost every one of us has these expenses. The thing is you just don't get these deductions on your tax return. So now let's look at adding a home-based business and what it does for you. And this could be a business. It doesn't have to be a home-based business, just a business in general. So I have an accounting practice now and have had that for 18 years. For 8 years, we operated out of our home. We now have an office, and I still work from home. So I get a double whammy. I get benefits on both ends. So here's what happens. Now, and I'll tell you guys, these expenses on the right-hand side are not minimums or maximums. They're just kind of averages that I see doing a tax return. So what happens is now our medical bills we can actually turn that into a tax deduction through, sorry, I was heating myself to death with a heater beside me. It was burning me. So we now have medical bills. So what happens with medical bills, you can hire your spouse. You can pay your spouse $100 a month. You can create a fringe benefit for him to pay medical bills. What that will do is that will allow you to treat your medical bills as a business expense. So he would pay the bills or she would pay the bills. They would be reimbursed by your company. Then the company now gets to take that 100% as a tax deduction. Then we have medical insurance. Anytime you're self-employed and you're paying your own medical insurance, that is a tax deduction as well. So you can see this stuff adds up. Property taxes, this is another one. This is huge. So auto expenses or auto taxes, you have real estate taxes, all that gets combined. Let's just say you bought an RV to drive around the country if you're in network marketing, to see your team, to build a team, all that good stuff. Property taxes on that would be included as well. So, and it's based on a percentage of your business use. Business use of home, this is one of the biggest expenses, and so many people believe that they're going to be that it's going to trigger an audit. I want to nip that in the bud right now. First, I want you to understand that by going from a W-2 employee to having a business, increases your chances of being audited, only because W-2 employees have no chance of ever getting deductions that that they should be entitled to, but they're not. So all the deductions that you have as a W-2 employee are literally just an earned income credit, a child tax credit, and you get itemized deductions. So, there's no reason for the IRS to audit these people because they're not getting deductions. And they can pull all of that information. It's already pulled in because the IRS has access to W-2s and 1099s and all that good stuff. What they don't have access to are business expenses. So business use of your home is not going to trigger you to be audited. It is not going to increase your likelihood of being audited. I've had 50% of my clients have always been home-based businesses, claim business use of their home. They have never been audited in 18 years. So I just want to attack that right now. So if you've been told that, do not believe in that lie. So business use of your home, it entails a lot of things. You can write off a portion of your mortgage interest. Depending on so if you had a 100 square foot office and you had a 1,000 square foot home, you would be able to write off 10% of your mortgage interest, your utilities, your property taxes, your insurance. You would be able to write off, you would actually be able to depreciate 10% of your home. So, and I have people tell me all the time, well, if, we have to, if we depreciate the home, we're going to have to pay taxes on it later if we sell it. No, that's not true. You have a $500,000 access to a gain and not have to pay any taxes on that. And from what you sell your business, your property for, to opposed to what you bought it for. So let's just knock that one out. Now, the next thing is charitable contributions, and I'm going to show you at the end of this how to actually take your charitable contributions and turn those into a business expense through giving from a gross profit level instead of a net income. So that's a huge, huge deal. It's something I do with my accounting practice. I believe it's one of the reasons why we've had such a successful practice in the last year and a half is because of our social giving and our charitable contributions. Now, I want to share with you, here's the thing. So if I just got started in a company, or just like my accounting firm, I'm always talking to people about taxes. I'm passionate about it. I'm passionate about freeing up money. So whatever you're passionate about, let's say you're in a nutrition company, or you're in a travel company, or you're in a whatever that company is, you pick up the phone and you call your friend. Well, you're going to call your friend anyway. You're going to go to lunch anyway. So you might as well say, hey, I want to share something with you while we're at lunch tomorrow. So you get in your car and you drive to your friend. You get to now write off 58 cents a mile for every mile that you drive to your friend. So let's say you drove 20 miles. That's 58 cents a mile that you can write off. When you sit down with your friend and have a conversation with them about what you're doing, so you're going to eat, you now get to write off 50% of your meal and every meal thereafter. If you're going to a training event, if you're talking to a potential prospect, if you're going to have a dinner with a friend that's on your team and you're talking about business, all of that becomes tax deductible. The next thing is, because I got on the phone and I talked to my friend and I told her I wanted her to come to lunch with me, now not only is my meal tax deductible, my mileage, but my cell phone is tax deductible. So here's the thing. If my friend tells me this is not for her, or I love it and I want to join you, or this is not for me, or you're going to hell or jail, it is irrelevant to what matters to me is that I'm trying to help my friend save money in taxes. I'm trying to help my friend buy product for free or get product for free. I'm trying to help my friend make an extra stream of income, because we just saw that on average, 46% of Americans don't have an extra $400 to their name. So we have to change that, guys. So I have a conversation. She tells me I'm going to hell. I say, you just don't get it. You don't understand that I'm saving $4,000 to $8,000 a year this year by having a home-based business. So now I'm writing off my meal. It's 50% off. I'm going to get back in my car. I'm going to drive back home. I'm going to write off 58 cents a mile on that. I'm going to write off my cell phone because I used it to talk to her about it and to run my business. I'm going to write off my internet because I needed that to run my company. I'm going to write off my travel, because see, here's the thing, guys. There's tons of either, I could go out of town. Let's just say today, I'm going 3 hours away to see my daughter for visitation today. And so by doing so, if I schedule an appointment with a client or with a prospect and talk to them about my business while I'm there, then my whole entire trip becomes tax deductible. continuing education events to me are the greatest thing on earth. So what I do is I will take my children along with me because I hired my kids, which is another tax deduction. I hired my kids, and I will typically go in a couple days before on the front end, or a couple days on the back end. I'll take my children with me. They now are hired by me, so all of the expenses that we pay are tax deductible for our travel, such as our lodging and our tips and our Uber drivers, and all of that, our flights, all of that becomes tax deductible for both of us because they work for me. So typically one of the jobs that I have my children do is I have like a personal assistant role, and they go with me to events. They help me sell books. They help me talk to people. I have children who do bookkeeping for me. I have children who shred paper for me. My son was here this morning helping clean up my office. So because I've incorporated them into my business, I hire them. Virtually all of our travel's tax deductible. Our entertainment is not, but everything else is. So it becomes really amazing to be able to have this excess money that would have been used for taxes if I had not had a home-based business. So office supplies and legal and professional. We're already spending money on new phones. I see every day somebody's got a new iPhone. So that is tax deductible because that's a business expense. You need a phone in order to transact business. And then I forget to tell people all the time that I am tax deductible. So what you spend on tax returns, filing your tax returns every year, tax strategy sessions, our membership that we have, that is all tax deductible. So I just want to share that. And so we have not really spent any more money today yet, because we have all these expenses anyway. So the extra expenses that we would have are things like advertising. So, and you may or may not in the beginning use advertising or spend money on advertising because of what Facebook and Instagram and social media is doing. And then you've got continuing education. And guys, I will tell you that I spend more on continuing education than I do any other expense in my life. This year, I became a platinum partner with Tony Robbins. That was $85,000 in order to be that. Plus, we had to spend about $40,000 in travel. It was the number one best decision of my entire life. And the reason why is because it took me to a higher level. It put me around the right people. It put me around the top 1%. It put me around people that were striving at a higher level than I was. So it made me actually dream and believe that I could get to a higher level because they did it. So, and not only the personal development, but, it just changed everything for me. It allowed me to market to the right people. And so I spend a lot of money on continuing education, but what it's done is grown our business 20 times in the last 2.5 years. So I would tell you that is the number one expense that you can have. And it's the greatest way to spend your money because you're spending money on your mindset. And that's going to not only grow you, but it's also going to grow your paycheck. So, and it's getting you around the right people so that they can teach you and how to get where you're going. So, because they've already been there. Now, dues, that's another thing. So you may have monthly dues associated with your company, and then, so those are tax deductible, and then cost of goods sold. Any products that you're buying for samples, any products that you're actually using, and you're marketing yourself. So let's just say I'm in a nutrition company, I use the products, I share that on social media. Because I'm sharing that, then that becomes a tax deduction. If you are just taking product and you're not telling anybody about it, it is not tax deductible. So what I'm telling you is that you cannot just get involved in a home-based business and do nothing. You have to actually attempt to earn an income. And by the sheer attempt, now you get these massive tax deductions. So the total expenses here is $35,000. And I don't even want to show you that number because it seems so astronomical for people. So what I did is I used $25,000 as my number. So we have a W-2 employee with a home-based business. They're creating income of $60,000 a year because that's the average income in America. Now they have $25,000 worth of business expenses that they did not have. Here's our standard deduction and itemized deduction, the taxable income. Here's the taxes, the take home, the cost of living, and here's what's left over. They are literally saving $5,600 a year in taxes by having this home-based business. If they're married, it's almost $5,000 a year. So The cool part about this, guys, is that you would have to increase your pay per hour by $3.79 an hour if you're single, or $3.05 an hour if you're married, in order to be equivalent to the tax savings. I don't think there's a lot of business owners that are going out handing out almost $4 an hour raises every single year, and when you get the same benefit to just save money in taxes by having this home-based business. So what does the IRS say that you have to do in order to show that you're attempting to earn an income? Well, what it says is that you have to do income producing activities 45 minutes a day, 3 to 5 days a week. And so that considers you to be treating your business as a business and not as a hobby. So if you'll put in the time, you cannot create a part-time job that is going to pay you back the tenfold what this would pay you back. And here's the thing I want people to understand. By going and getting a second job or a second income in your household, most of the time, if you factor the taxes that you're ending up paying extra because you're in a higher tax bracket, you're actually better off to stay home when you add up all the expenses that go along with it. I had someone come into my office just recently, and they had a question of how much they were going to have to pay in taxes because they had an increase of $35,000 a year. They were a married couple, had no kids. One was making $85,000 a year. One was making $55,000 a year. This $35,000 increase in pay literally was only giving them an extra $13,000 a year in income. So it was costing them $23,000. Yeah, is that right? Yeah, $23,000. It was $22,000 a year. It was costing them to get this increase in pay. That makes no sense. So I said, while you're here, let's figure out if you're making $85,000 a year as a W-2 employee and she's making $55,000, let's get rid of her $55,000 a year. And we determined that the difference in the taxes, she was only bringing home an additional $1,800 a month into the family. It was costing them $34,000 a year in taxes, guys, because they were being put in a higher tax bracket. So $1,800 was $21,000. That's what she was bringing home. $34,000 was going to the government. That makes no sense to me. There's no reason in working that so hard to get a $55,000 paycheck if you're only bringing home $1,800 a month. So I told her, I said, you could find a home-based business, and along with the tax deductions and the extra money you can make, if you could just make an extra $1,000 a month in a home-based business, you would be better off than making your $55,000 a year paycheck. And the sad part is that people don't understand and they're not educated on this information, so they would just go out and find another job. And that is not the way, because all you're doing is putting yourself further and further and further in debt. So here's what happens when they make an extra $500 a month. So if I make an additional $500 a month, I'm not paying taxes on any of that money because I still have business expenses to offset the income. So the taxes, here's the taxes, here's the take home, here's the cost of living. Now we have a difference of $10,500 for an extra $500 a month, guys. It's a huge, huge difference. You'd have to make an extra $7 an hour. And if you're single, and if you're married, it's $6 an hour, $6.48 an hour for every hour that you work, and that is 2,000 hours a year is what the average person works every single day, so or every single year. So it's just crazy. You've got to find a home-based business, and you got to stick with it. So not for let alone the tax deductions, but if you just stay with it and you actually start opening your mouth and sharing this with people, because that's how you get the tax deductions, then you're going to win always. So here's the standard mileage rate. So I want to go in detail on the vehicle. You can actually either do standard mileage, which used to be the greatest way to get tax deductions. It is no longer if you're buying a new car. It doesn't have to be new to you, or it doesn't have to be new. It just has to be new to you. So the mileage rate is 58 cents a mile. It's called the shortcut method. You can claim just mileage. You can't claim anything else, and there's no depreciation. So if you have 15,000 miles, you would take 58% of that. That would be $8,700 that you would get in a tax deduction. Okay, so whatever your tax rate is, it's going to save you, around $3,500 to $4,000 a year. So that's a big deal, but it gets better if you do actual mileage. So in order to determine our actual expenses, you have to first determine the business usage. So the business usage is the business miles divided by the total miles. So if you had 8,000 miles for business, 10,000 miles was total, that would be 80% would be used for business purposes. And you can actually track all of your expenses, your gas, your oil changes, your repairs, your supplies, your interest on your vehicle, your car washes, all these things can be added up and deducted. So you would take, let's just say it's $12,000 in actual expenses. 80% of that would be $9,600 deduction, but it doesn't just stop there. You also get depreciation, and depreciation has changed drastically from 2017 to 2018 when the new Trump tax laws came out. So I wanted to share this, how this works with you. And so the depreciation levels have actually increased 3 times and allowed you to take more depreciation every single year. Under the old law, it used to take 18 years to write off a $50,000 car or a BMW, let's just say. Now it allows you to do it in 5.3 years. So you don't have to buy a new car, but it has to be new to you. And the vehicle had to be bought after December 1st, 2018. If not, then you are applied to the old rates. So we bought 2 new cars in December 2017. Nobody told us that the laws were going to change. So we bought these 2 new cars. One was a Suburban, which is over 6,000 gross vehicle weight. And what that means is there's something called a Section 179. You don't really have to understand it, but I want you to understand that if you buy a vehicle that's over 6,000 gross vehicle weight, these depreciation limits don't apply to you per year. You can actually write off 100% of the vehicle in the year that you buy it if you have that much of a net income. So for your business, so that's a big deal. So say I bought a $50,000 vehicle that was 6,000 gross vehicle weight, I would actually get a $50,000 deduction this year if I had that much in income. So, and I'm allowed to take that much. Okay, so if we buy a vehicle that's under 6,000 gross vehicle weight, this is the depreciation limits that apply. So I bought a car December 2017. I bought a BMW. So that $50,000 BMW, the first year I was able to get $11,000 deduction on that in depreciation. The second year, which was last year, I was able to get $5,100 in a deduction. The third year is only $3,000 in a deduction. So here's what happens. I can either opt for the $3,000 deduction this year, or I can buy a new car, which is exactly what I'm going to do. So now, instead of $3,000, I now get a $10,000 deduction. So it starts over. Next year, I'll get a $16,000 deduction. And you're entitled to this even if you buy the vehicle up to December 31st. The rates are a little bit different on how much you get to take. You can't take 100% of this, but it's very beneficial if you are in the market to buy a car to go ahead and do that after December 1st, 2018. So huge deal on depreciation. And here's what gets into my story of the Tesla. So I want a Tesla Model X. I had to wrap it around my brain why it was a good idea to buy the Tesla Model X. So here's my take on it. It has no gas, so it saves me money. It is 100% tax deductible in the first year because it is 6,000 gross vehicle weight because the battery is so big. It's an electric car, so I get a $3,750 electric car credit this year. It drives itself so I can work more. So that saves me money, that saves me time, so I love it. And then I get a $16,000 credit back because of my income. So what this will do for me, not only am I paying my kids, but you know, what happens, I'm buying a Tesla, so I lower my taxable income to the lowest tax bracket, and what that will do is that'll allow me to get the maximum earned income credit and the maximum child tax credit. So that's a $16,000 deduction for me, or credit for me, that I'm getting back for money I did not pay in. Then on top of that, I'm going to save about $40,000 in taxes. It doesn't get much better than this. This is almost $60,000 back to buy a Tesla that cost $106,000. So it just makes total sense in my brain that I should buy the car. So I don't know what you think about it, but that's the way it works. You know, I believe time is money. And if I can find a car, I can free up some of my time, you know, and it's saving me tax dollars. You know, here's the thing. I would have to make, in order to save $60,000 in taxes, I'd have to make, or in order to recoup that $60,000 in taxes, I'd have to make $100,000. So, you know, it's crazy that people don't think the way that I do, but I'm trying to teach you how to do that. I had a financial planner that actually called me after he called me and he said, Courtney, we need to invest in appreciable assets this year. And I was like, no, what we need to do is invest in a Tesla. And his head almost spun off, like he was so shocked. And I explained it to him, and then it made sense. And I was like, man, I won't have the money to invest in appreciable assets if I don't buy the Tesla and free up $60,000 in taxes. And then it started making sense to him, because literally the Tesla doesn't cost me much more than my BMW does. So it made total sense to me. So hiring your kids, that's another great way to save money in taxes, and a way to make your kids responsible. So what I do is, kids are expensive. They have sports and dance and college and smartphones and video games, and later on they are having weddings. So what you do is you hire them and they pay for their stuff. So you get a bank account with their name on it and your name on it if you want, if they're underage especially, and then you can pay them to do things that you would pay someone else to do. So you could pay them to do just like us. We do bookkeeping. We have children that help us clean the office and clean our house, because we also still have a business use from home. We have children that help answer the phones for us. We have them help shred paper, all those things. If you would pay, and personal assistant work. So if you would pay someone else to do it, you can pay your kids to do it. So you hire them, they pay for their stuff. The first $12,000 a year is income tax free for them because of the standard deduction increase. And then you don't have to pay taxes on any of the money that you pay them. So you could pay them more than 12, but the first 12, they don't have to pay taxes on. That is called income shifting. And it allows you to push money off to them, which they're spending anyway. And by doing so, you're shifting that income off and putting it in a lower tax bracket. And that is perfectly legitimate for you to do that. Now, if you are, if the children are under 18, there's no taxes taken out. You don't have to have FICA taxes taken out. There's no self-employment, because they're not entitled to self-employment, or there's no unemployment taxes because they're not entitled to unemployment taxes. And then they don't have to have federal or state taxes taken out because they don't owe it on the first $12,000. If they're over 18, you would have to do FICA. So they'd pay 7.65% in FICA. You would pay 7.65% in FICA, which will be much better than you actually having to pay all the taxes, the federal, state, and the FICA on it. So huge deal, guys. Hire your kids to do the things that you don't want to do, or hire them to do things that you can hire someone else to do. And you can pay them a reasonable wage. I'm not telling you to pay them, $30 an hour to shred paper. I'm telling you that if you would pay somebody $12 an hour to do that, or $8 an hour to do that, you can pay your kid the same thing. So the next thing is something I'm extremely passionate about. Now getting back to that hiring your kids, I have 6 children. That's $12,000 a year. That's $72,000 a year in a tax deduction. 12 times 6, $72,000. That saves me almost $28,000 a year in taxes on money I was going to spend on my children anyway. So the next step is social giving. So I believe, and I have lived this my entire life, is if you help enough people get exactly what they want, you will automatically get what you want over time. So it doesn't happen overnight. I used to think, I'm supposed to help somebody today, and then tomorrow I'm going to have something. But you realize that it's not the case. So it's over time, as you continue to do this, it just compounds, and then your life continues to get better. And so what we started doing April 16th of 2018 is that we started providing, for every dollar that came in our accounting practice, we started providing a serving of whole food, plant-based nutrition to children in need. I am not talking about providing food for children to provide them with food. What I'm talking about is we are helping medically fragile children. We're giving them nourishment, that children that are malnourished, that have major medical issues, and we're helping them, and we're changing their life by giving them this product. So it's been very good for us, for our business, but it's also allowed our family to be involved. It's allowed our staff to be involved, and we're doing something on a different level because we've combined our passion and our profits. And so by doing so, you get massive tax deductions for that. So instead of taking a charitable contribution on your personal tax return, which most people do, and again, I said 96% of Americans don't get benefit for itemized deductions. So even though they're giving to their church, even though they're giving to the Salvation Army or to Goodwill, they're not getting benefit from that. But if you give from a gross income level from a business instead of a net income, then that becomes 100% tax deductible as a cost of goods sold item. So let's just say I sold phones for a living. And so every time I sold a phone, a cell phone, I would give $50 or I would give $20 to a nonprofit. It could be every time I sell a pen, I'm going to do something. It could be every time someone joins my team, I'm going to give something. It just has to be part of your business model. And by being a part of your business model, you now have access to benefits that you didn't have before. So those cost of goods sold, it becomes a cost of goods sold item, not a charitable contribution. It's 100% tax deductible on your business, which is a huge, huge deal. And so we have been tracking, and this number is not anywhere accurate. We have hit over 900,000 servings since April 15th of 2018. So I think that, you know, helping people save money in taxes is one thing. Finding people money they did not know they had is an even bigger thing. But feeding children along the way, doing exactly the same thing that I was doing on a daily basis anyway, that is life-changing for us. So I'm super excited. You know, every 6 seconds a child dies of malnutrition, and we fund a company called Manna Relief. If it's a nonprofit, if that's something you're interested in and want to know more about, I'll be happy to connect you. It's just very passionate. It's just very big for me to be able to help this entity. So what do you do now that you're making money? So I've taught you how to get more people on your team because they have to be on your team. They need to be in a network marketing company or a home-based business because they've got to free up this money that they're overpaying in taxes. The next step is for them to stay in long enough to win because, you know, the average person will drop out of a network marketing company in 90 days. Why? They're getting no benefit from that. And then they're losing massive tax deductions to the tune of $400 to $700 a month. When I was involved in network marketing, I would pick up the phone and call my downline and say, hey, you missed a payment. And then they would give me a reason why they missed their payment. And I was like, man, you can either pay the $100 here or you can pay the IRS $400 to $700 this month. Which one do you want to do? I mean, because it's the minute you decide you don't want to be in business anymore, you now go back to paying more taxes. It makes no total sense to me. So what happens when you start making money? And if you are not seeing people making money here, I don't know who is on this call. I don't know if you just got started. I don't know if you're even in a network marketing company, and I don't know if you're a top income earner. But what I will tell you is that I talk to people every single day who are making millions and millions and millions of dollars in the network marketing industry. It is a real legitimate industry. It is one of the smartest things that you can ever possibly do to save money, but then also to make money. So how do we keep it when we make it? The biggest thing I'll tell you is that immediately when you join a network marketing company, I would tell you to get an LLC and put that business, instead of putting the position in your personal name, I would put it in the LLC. If you haven't done that yet and you're at least making $10,000 a year in gross income, meaning that the company's paying you $10,000 or more, you should definitely get an LLC. Once you get that LLC, I suggest once you hit $10,000 a year in net income, meaning that after expenses, so I just talked to you about $35,000 worth of expenses that you could write off that on average of what you should have. So once you hit $10,000 or more in net income, you need to be an S corporation. And why I say that is because you can take your LLC, treat that as an S corporation for tax purposes. You don't have to spend a whole bunch of money with a lawyer to set that up. But what you would do is you would take the LLC. We would treat it as an S corp for tax purposes for you. We can actually handle that. And it allows you one of the biggest tax deductions. You can bypass self-employment taxes almost completely, or at least 80% of them. So an LLC just limits your liability, but what it does is it allows you to treat your business either as a sole proprietorship, which if you guys have one tax return, then you're filing a Schedule C, which is profit or loss from a business. If you have two tax returns, then you're typically either filing a partnership, which is treated exactly the same way as a sole proprietorship, or you're filing as a S Corp election. And the number on that tax return would be an 1120S. So that's what we're looking for, is this 1120S in a personal tax return. That is going to be your biggest tax savings. So here's what happens. Let's just say you made $60,000 in income from a business. You would, if you were a sole proprietorship, a partnership, or just an LLC, then you would have to pay $9,000 in self-employment taxes. If, however, you had an S corporation or an LLC treated as an S corporation for tax purposes, then you're going to save 80% of those self-employment taxes. So it's going to save you about $7,000 a year, which is a huge deal. As you continue to make more money, obviously it gets even bigger deductions. Now, on top of that, most people don't realize that when Trump came in last year, 2018 tax laws were changed, that the new tax law changes. He also added in a 20% pass-through entity deduction. So what that means is if I'm making $60,000 a year as a W-2 employee, I'm not only going to have to pay FICA taxes of 7.65% of every dollar I make. I have no option, no say-so in that. I'm also going to have to pay federal and state taxes on that. Whereas if I make the same $60,000 over here as a business owner, that $60,000 I can bypass 80% of the self-employment taxes, so that saves me $7,000. I can also bypass 20% of the net income from the business, and I don't have to pay taxes on that. So that's $12,000 more dollars that I don't have to pay taxes on, which is saving me between $4,000 and $5,000. Huge deal, guys. I want you to understand. There's never been a better time to have a home-based business. The time is now. Find one, join one, something you're passionate about that you can open your mouth and tell people about. And tell your friends about it. Do not be scared to talk to people about this business just for the sheer fact that they may not join you. The thing is, guys, is they don't know. They've been taught a system that is broken to go to school, get good grades, and go get a good job. That's all they know. They're not taught that they need to go get a good business or that they need to start a business. So it's your job to educate people differently on what they think is the way the world works. And the way the world works is to find a business, start sharing that with people, get massive tax deductions, and then one day go out on your own. Hopefully, that be a full-time career for you. So take the deductions that you're entitled to. That I can't say any better than you are entitled to massive tax deductions, and you should take those deductions, period. Do not let someone tell you that there's a maximum that you should take or that's going to trigger an audit. That's not true. Your expenses have nothing to do with you being audited. Everything that I'm telling you today, I learned from a guy named Sandy Botkin. Sandy Botkin was an IRS attorney. He actually trained IRS attorneys for 5 years at the IRS. So he has the insider scoop on what happens. He's a tax attorney and a CPA. He has a book called Lower Your Taxes Big Time. That book, I read that book. It changed my whole entire accounting career. I started sharing the truth with people. I started actually sharing tax code with people that came from that book. Those were not things that I learned in college, and they obviously weren't things that I learned at 3 different CPA firms that I worked for. And the average accountant that I talk to on a daily basis has no clue of the things that I tell them. And the reason why your accountant is not telling you this information is, one, they don't know it because they're being educated by the government through continuing education. They're not going outside of that trying to find their own information and actually reading tax code because they have no time. The other reason is that I get paid more to prepare a tax return for you than I do to do a tax strategy session with you. So I want you to realize that we are limited on time. I have just made it a priority in my firm is to educate and teach because I want to free up this money for people. I know that the average person can save $4,000 to $8,000 a year just by having a home-based business. I know that 96% of business owners are overpaying in taxes, and it's my job to be able to help you find that. The other step, hiring your spouse and your kids, that can save you a ton of money. We need to talk about hiring your spouse. If you have a lot of medical bills, there's a couple things that you have to do. I will have to connect you to a company that does HRAs. We'll have to set that up for you, and we'll have to talk about the benefits around it. So I want to make sure it's beneficial for you before you even do it. Then, and the same thing with the LLCs and the S corporations, we can help you do those. I'm never going to tell you anything that you should do unless it's massively beneficial for you. It's not just to get money from you. Hiring an accountant, I will tell you that is one of the most important things that you can do. But I won't tell you this, if you have to argue with your accountant every single year on tax deductions that you should be entitled to, that they're not allowing you to take, you need to find another accountant. The reason why is if you ever get audited, they're not going to back you. They're not going to help you. And most people are never going to handle an audit that they did not prepare the tax return for. So that's crucial. The other thing I will tell you is do not try to do your own taxes. I see it every single day. The last person that came to me and said, what can you do compared to TurboTax? I found him $21,000 more. So what can I do compared to TurboTax? I can think. I've ran a business. I understand tax deductions. I know what you can take, what you should take. And that is not something you're going to learn through a system. As much as I wish you could. So here's the thing. You're also more likely to be audited if you prepare your own tax return, especially if you do have a business, not a home-based business, but a business, because the IRS knows without a shadow of a doubt that you're not answering the questions that we have to answer. So when I do a tax return, I have to answer about 30 questions saying you provided me with information and that I feel like that information is correct. And because of that, that makes you less likely to be audited. So I just want to throw that out there. I don't want to scare you. I just want to tell you the truth, what I see. Then tracking deductions. The only 88% of audits are won by the IRS, and the only reason they're won is because people aren't tracking their deductions properly. You cannot use an Excel spreadsheet. You cannot just have a bag of receipts. The IRS, the auditors are lazy. They're not going to go through every one of your receipts. The only time I've ever haven't had an audit, I've had 2 audits. One I won completely. I did all their books. It had nothing to do with me prior. It was actually a tax return that they were audited for prior to me doing their taxes, but I ended up taking on the audit. We had their QuickBooks. Everything went through. I redid the tax return, and it was great. The second one, they did their own accounting. They had a ledger, kind of like an Excel spreadsheet, and they had receipts and they had bank statements, and we submitted it. The auditor actually came back and disallowed $150,000 worth of deductions, and I went again backwards and I put it back in QuickBooks. I created them a P&L. I redid the tax return because there was a little bit of discrepancies between doing it on paper and doing it in bookkeeping. So I gave them a P&L. I gave them a balance sheet. I gave them a general ledger. I gave them bank statements, and I gave them some receipts, and everything was allowed again. See, they want things to work perfectly. So they want a tax return to match a profit and loss statement. The profit and loss statement needs to match a general ledger. The general ledger needs to match bank statements. And if you're not currently doing that, we have a membership that will help you not only with the software, but also with the strategies that I'm teaching you today, and to make sure you're getting the most deductions possible and that you're being compliant all at the same time. So guys, what I'm telling you is that you need to share this industry with everyone. Everyone needs some sort of home-based business. I'm not telling you that they're going to get it right away. I'm not telling you that the nutrition industry or the travel industry is for everyone. I'm saying that you got to find something you're passionate about, and you start sharing that with people so that you can not only impact your life, but you can also change every life around you. And they may not get it today, but if you come back at someone and you say, look, I'm just trying to share this with you because it's saving me money in taxes, and I wanted to help you understand that as well. And that is such a different place than to tell someone that, you know, if they come back at you and says, oh, well, is that a pyramid? One, they don't even know what they're saying. They don't comprehend what they're saying. They're just saying what they've heard. They're not trying to attack people typically. They just don't understand it. So you've got to come back at them and just share with them what I have shared with you today. So, you know, I hope that helps. This is actually my book. You can buy my book on, you can go on Amazon and buy it, and I'll get paid on it in 4 months, or you can go to my website and buy it at morerelaxinglesstaxing.com. I will sign that book for you. We will mail it off within a couple days, and you will have that book. So we can help in a lot of different ways. So we can, you know, if you're overpaying in taxes, I know most people are. If you're overwhelmed with your bookkeeping, we do all those services in-house. We also do tax prep. So, and we can talk to you about our membership and what that looks like for you. So if it's something you're interested in, that's great. If not, it's no big deal for us. The one thing I will give you today is that you can receive a $99 tax strategy session. This is good until 11:30. That price will go up to $149 on 12/1. And here's the link. So you can go to the otbtaxstrategy.youcanbook.me. Another place, a resource, a free resource for you is More Relaxing, Less Taxing on Facebook. I created a group there, so you can find information there. Here's access. This is my assistant's cell phone. You can reach out to her as well, but the best way to book a time with me, again, she's going to redirect you back to the otbtaxstrategy.youcanbook.me. So I hope this helped, and now I'm available to answer any questions if you want. So I'm going to stop my share. And I am going to allow anybody, you should be able to unmute yourself. If not, just put something in the chat to say hey or raise your hand and I'll unmute you so you can talk if anybody has any questions. I know that the information I kind of throw, it becomes like a fire hose for people. So I just want to, and I may have answered everything. Jackie, I got Jackie on the call, so I wanted to first thank Jackie for allowing me to speak today. And I want to make sure I covered everything that you wanted me to cover.
Hey, Courtney, thank you so much for doing this for us. I know that the girls are going to be, excited that couldn't be on here live. And I know the ones that are here live are probably overwhelmed but excited with the information. I have a question because I am a 1099 hairdresser.
Okay.
And so my question is, when I'm presenting the business opportunity to my coworkers who are also 1099 or other people who have their own small business, what is the benefit for them to have a home-based business?
So there's two reasons why you'd want a home-based business even over a traditional brick and mortar business, is because your commuting miles are not tax deductible and your business use of your home. So one of the things I talk about, and I kind of forgot today, is, we have a swimming pool. We just put in a $46,000 swimming pool last year. And that swimming pool is a fringe benefit for us because our employees, who are our children and my husband, are employees of our company, and we allow them to swim in our swimming pool. That makes our swimming pool a fringe benefit, and it is now tax deductible. So huge deal. And the other, and I don't know if anybody else wants to be seen. I'll be glad to, if you want to add your video, that would be awesome. So I'm not talking to a black screen constantly. I feel much better now that I can see Jackie. But so business use of your home, and that could be a $3,000 to $5,000 a year deduction. Then you've got the other things like the fringe benefits that you can offer. You have to have, your employees have to work on your property in order to get that deduction. So that's one of the reasons why I still continue to work from home. The other thing, the commuting miles, anytime you have a brick and mortar business, you can't write off your mileage from your house to your job. And so if you have a business from home, a home-based business, your mileage is now tax deductible everywhere you go if it's related to business. So huge deal. I mean, you're talking about, it could be $10,000 a year in difference in deductions.
Okay, and thank you. That's for brick and mortar. What if I'm a 1099 within a brick and mortar business?
It's the same thing. I mean, they have a place to work. So that is a brick and mortar because they're working in a building, and because they go to that building every day, they don't get tax deductions for commuting miles.
Oh, awesome. Perfect. Okay, Sandy, I know if you're still there, I'm not seeing your name. There you are. Please fire away because I know how your mind is, and I know you have a lot of great questions that I haven't.
Good morning, ladies.
Good morning.
Hey, Sandy.
Thank you, Courtney. I love this. Every time I listen to one of your videos, my head spins. It just amazes me the way your mind thinks. It's craziness. I just wish I could tap into it just a little bit. So the whole, you've got to show profit, you got to blah, 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 blah. I've been into this, into my business now for 3 years, 3 tax years. And last year I showed like hundreds of dollars just to make sure that I showed a profit, because that's what they told me I had to do. And you're muted, by the way, girl. And
I have somebody listening to me, but I have a headset on, so I'm relaying to him. I'm training. I'm doing a training while we're actually talking, so I'm relaying to him what you're saying.
This is crazy the way you do this. Anyway, so what happens if I go back this year or next year and have more write-offs? I'm able to show that I don't have a profit. Do I have red flags going up?
Again, your expenses have nothing to do with you ever being audited.
Okay.
Your gross income has to do with you being audited. So if you went from, let's say, and what company are y'all in? I don't even know.
Rodan & Fields.
Okay. Everybody on here's Rodan & Fields. Okay, good. All right, so let's just say Rodan & Fields wrote you a check last year for $10,000. And this year they wrote you a check or deposited in your account $150,000. That could trigger an audit. Okay. If you showed on your tax return, even if you didn't have a 1099, let's just say you showed on your tax return this year you made $500,000, and next year you showed you made $50,000. That could trigger an audit. What the IRS is looking for is massive changes. But it has nothing to do with your expenses, because Amazon paid $0 in taxes last year on $11.2 billion. Walmart pays on average a 0.12% in taxes. They are not looking at expenses, they're looking at a gross income. So, and the only reason they're looking at that is because if that could be a error on the accountant's part on entering in the income. So if it increased, like let's just say it dropped to 10%, that would probably say there's got to be an error here, right? Because there would be no way that they went from one to the other. So it's just logical. I mean, just like with me, we've grown 3 times this year. I mean, like we've grown 20 times in 2.5 years. I'm more concerned about me having an audit. The expenses they don't care about. The expenses are irrelevant. It's just there's a massive increase of income, right?
Yep, I get it. So I am a W-2 employee. I've had my business. I'm a work from home W-2 employee. So I lost all these deductions that we had before the new tax law. So now I was so thankful that I had my business last year to still be able to write stuff off, because I didn't have it before, which it amazes me how many people don't realize that you either lost it, you just know, ooh, the new tax laws came into effect and it really just messed us up. So so I have that. So here's the next question. I'm a spreadsheet tracker, which is, I just learned is a no. So how do I go back through now, 10 months and get myself on track so that way I'm doing what I'm supposed to for this tax year and then going forward?
So we have a software, a membership that I created for $39.95 a month. Like it's whopping, it's like major money here. So, and it's tax deductible, so that's cool. It'll save you $16 by having it. But what it does is it does 2 things. So I realized about a year ago that my time was running short, and I knew that I had to get this message across, because I don't do these webinars to bring in more clients. I do these webinars because I have to change the world, and I feel like God has put this on me to help people, because I can do it in a way that people understand it. I can do it in a way that they don't feel intimidated, And so we just got to share this whole mission. This is just a mission, right? It would be nice if I could just talk and not get busier after I talk. That's what I'm trying to go for. But whatever.
I don't know if that's going to work for you, girl.
It is not currently working. But the cool part is, so I created this membership and I started creating video content. And so it's turned into a strategy plus software. So the software we partnered with, it allows you to upload your bank accounts, your credit cards. It will pull in your transactions, just like we do in QuickBooks, because we can do it in QuickBooks, but QuickBooks by itself without anything is $40 a month. So the software allows you to pull in your bank accounts, your credit cards. It will recognize those transactions as you continue using them. So every month it gets easier and easier to do your bookkeeping. The other thing that it will do is it will pull in, you can take pictures of receipts and it'll connect those receipts to your transaction. So it finds them and connects them. So that makes you even more audit proof. So there's reports that can be pulled for you to help you if you were to ever get audited. And we obviously will help you if we're doing your returns. We will help you as well.
Okay.
The other thing is that it allows you to have, what's the word? Oh, your mileage tracker. So instead of you tracking your mileage on paper or whatever, it actually recognizes when you're driving down the road and it will put in the to address and the from address. So it makes it very easy to track the expense, all of those expenses, your mileage, your business. Now, you can pretty much pull in the past 90 days that they'll automatically feed into the software. The rest of it has to be done through data entry. But once you've done it, it's done and you're audit proof, you're good to go. And everything is reconciled. We know everything that's supposed to be there is there, right? I will give Jackie, she can relay that to the team, or I think it's actually in the more relaxing, less taxing page, is a deduction spreadsheet that I created for home-based business owners to help them understand what they can write off and, what is tax deductible for them.
Okay.
So that's the software piece through the membership. The strategy is you get a weekly Q&A with me, so I'll answer any questions you have. I do it on Sunday afternoons. I typically either do it at 1 or 6. It just kind of depends on my schedule. The other thing is I do tax strategies. I do at least 4 tax strategies every single week, and I give you things that you may know, may not know, to help you save money in taxes. So I'll tell you why you need the strategies. I'll tell you what it's for. I'll tell you how much it could save you potentially, and then we can help implement those strategies if it's something that works for you. The other thing is you get a unlimited $49 tax strategy sessions with us. So, we'll help you out throughout the year. The best way for me to save you money is for you to put information into your software or to have some sort of QuickBooks so that I can check it and say, hey, this is what you're missing. I can also review prior year tax returns and find things that are missing in about, 5 minutes. But, going forward, we need to make sure that you're not only set up properly, but that you're also getting the expenses that you're entitled to. And then it's a 10% discount off of everything we do for you. So the whole purpose of it is to free up my time so that I'm not answering the same questions over and over every single day, which I still do anyway. But one day I'm going to run out of time. So we have to start utilizing the system. And maybe I'll create an AI and maybe we'll have a hologram. Les Brown just told me 2 days ago that we're going to have a hologram of me and him, and we are going to be in 50 different locations all over the world at the same time delivering the same message. So maybe that day's coming really, really sooner rather than later, but that day is not today. So
is the world ready for that?
Oh, man, I don't know if the world's ready for me, girl. I'm telling you. I mean, like, people, I can watch people, it looks like their brains explode when I'm talking sometimes.
I feel their pain. I do. So, I just had one more last question and it just went away.
You're good.
Yeah, not really.
Okay.
The old brain that's just catching up with me. I did too. I'll think about it.
Write it down if you
Yes.
think.
Yes.
Courtney, I have a question. I had I had been presented with this the other day. I have a friend of mine who's retired, but she is working PRN at the Mayo Clinic. So she wants to join, but doesn't want it to affect her Social Security. Does that make sense? Because I'm a little confused about how all that Social Security and stuff works. How much you can make? You can only make a certain amount.
Right. Social Security has to do with W-2 income, not self-employment income.
So to backtrack
It
on
actually
that,
would help her. It actually would help her because she would now have business expenses.
Okay.
That would offset her income. So
Oh.
she would actually pay less if she did. So she could actually work more as a PRN if she wanted to, because she would not pay as much in self-employment taxes because of the business expenses.
That's what I needed. I'm going to mute.
I mean, I have a friend of mine who actually, one of my oldest clients that was disabled. She had a kidney transplant 12 years ago, something like that. She's on Social Security disability and received $250,000 a year in her business.
Wow.
And did not lose it. We actually called them to cancel it for her.
Wow.
Because I felt like over time, like if you keep making $250,000, like maybe we probably need to drop it.
That's crazy.
Yes. Yeah. And all they did, they actually, they said that 18,000 of it that they paid her, they wanted it back. So they just deducted it from her Social Security. So, but I mean, she's making $250,000 a year. It did.
Wow.
It's not hurting her at all.
It definitely is not the world mentality.
No. And the other thing is most people don't understand, like, they'll say, well, you're not paying in taxes if you're self-employed. You're actually paying in double because of self-employment taxes. So that's the reason why as an S corporation, you have to provide yourself some sort of paycheck, which is typically, we say 20% of your net income should be a paycheck. So if I'm making $100,000 a year as an S corporation, now I take $20,000 a year as a paycheck. Okay, so I'm paying in self-employment taxes. If I'm paying in self-employment taxes, that's the money that goes to Social Security and Medicare. You would be amazed on a daily basis how many people I see who are being told by their accountant that they should pay themselves $100,000 a year as a reasonable salary, and they're losing $100,000 a year. So they're literally losing every dollar that they're making, and all that's doing is making them pay more in self-employment taxes. They overpaid $15,000 in self-employment taxes because their accountant thought it would be reasonable for them to pay themselves $100,000 a year, but they have $100,000 worth of expenses. Like, it's just stupid. Like, the stuff I see on a daily basis, like, it makes me want to throw up, and it makes me want to choke somebody out, is the best way I can say it, on what is happening with these people, and being told that businesses are not legitimate if they're home-based business. Well, I ran a $700,000 a year accounting practice out of my house. So I can tell you that it's perfectly legitimate to have a home-based business. And it's no different. What you guys do is no different than what I do, other than I have a lot more headache and a lot more stress and a lot more employees and a lot more paper to deal with and a lot more printers and a lot more computers and a lot more everything else. So, you guys are in the best situation possible. If my husband would let me, I'd be in network marketing, but nobody's sharing my story. So, God, I just want to run my mouth for a living. I mean, like, people tell me all the time network marketing is hard, and I'm like, you just get to run your mouth for a living. I mean, somebody might tell you that what you're doing is stupid, but you get to run your mouth for a living. Like, I have to actually work and then run my mouth when I have time.
Okay, well, I remember my question. So,
and see, I got to train while I'm doing that.
I know.
Two people in here listening.
It's just cracking me up.
See, they're working hard. This is Crystal. This is Tony, working hard over here. Working hard.
So, if we decide to use you to do our taxes,
Hmm.
I mean, I've always gone to my accounting office and sat down and answered questions. How do we do that?
Everything is done electronically. We
So
send you a spreadsheet that you send back to us, or you have it in TaxBot, so you send us a copy of the P&L, and then we ask you questions. Like, you don't actually have to sit down with anybody to answer questions.
Okay. And what's
Yeah,
the turnaround time frame?
we typically have it done in about a week once you send us the information
Okay.
during tax season. I mean, sometimes sooner, but I mean, at least a week, because you're
That's
going to
not
always
bad.
not send us information, and we're going
Right.
to need more information. So,
Okay. All right. Okay.
yep. We'll do about 3,600 tax returns this year.
How many employees do you have?
17.
Holy moly.
I had 3 6 weeks ago.
So that's the hands-on training.
Yeah, we just got another 4,000 square feet that we added in because we maxed out the office. We've got, we moved in 3 weeks? We moved in on the 1st. We've been in here a month. We moved in on the 1st and we maxed it out already. So we're getting another 4,000 square feet.
Good problems.
Yeah. So, and y'all saw I'm going to be at the air quarry. I'm going to be speaking at GoPro.
Wow.
Yep.
That's cool.
Started this process August of 2018, working alongside network marketers to help them. And I've been on Air Quarry Stage, Tony Robbins, Les Brown, and Rachel Hollis, and Grant Cardone's the keynote. So I'll be speaking alongside him. And yeah, crazy. Lou Holtz is speaking.
I love him.
Yeah, so he'll be speaking, and who else? Grant Cardone. So Grant Cardone right now that I know of.
That's exciting. Good for you.
Thank you.
Good for
Who
you.
knew? Who knew that I could just run my mouth about taxes and people put
You
me on the
did.
stage all over the world?
You did.
Yeah,
You
I did. I
If
did.
you keep talking, someone's going to listen at some point,
Yeah,
right?
that's right. That's right. They don't put me on stage to shut me up. That's right.
Well, I tell everyone that will listen about you and about how I have such a crush on your brain and your
So funny.
if I
She
could
has a
just
crush on my brain.
what?
Go ahead. I was telling
It's
him what you
training.
said.
Like Sandy said, if she could just get into your brain just, for a little bit, but I appreciate that you have let us in.
Mhm.
You are welcome, guys. Well, I have got to go do a tax strategy session. I have one every 30 minutes every day. So I hope y'all have an amazing day. And if I can do anything else for you, you let me know.
Yep.
Thank you.
All right, guys. Bye.
Bye.